Markets have been drifting lower as September rate cut optimism cools off. The odds for a cut are still high, but definitely pulling back. You can really see it in riskier assets, with growth stocks underperforming value. So, what's driving the shift? Well, today was the White House ramping up pressure on the Fed, calling for a governor to resign. Obviously, with an agenda, a resignation would open a new nomination slot to potentially stack the board with more dovish voices pushing for faster, steeper cuts. But here's the twist: that actually hurts market confidence. You'd think more doves equals more cuts, which equals good for stocks, right? Not exactly. The market wants cuts, but for the right reasons. Cuts are supposed to mean lower borrowing costs for mortgages, for businesses, for loans. However, trust in the Fed is grounded on it being independent and apolitical. If the Fed starts to lose that, bond buyers may demand a higher risk premium. Essentially, higher interest rates despite the Fed funds rate base that could cancel out the benefit of the cut. So, how does the market want this to play out? Well, step one, inflation progress. The recent data has been looking good, but tariffs are a big wild card still. Powell has basically said that there already would be more cuts if not for tariffs. Step two, a gradual weakening of the labor market. Not collapsing, just softening enough to nudge the Fed. Because if it's too weak, suddenly you're looking at a recession. Right now, the market's case is inflation hasn't really flared up yet from tariffs, and the jobs data seems to be weakening. Meanwhile, the Fed minutes released today didn't add much. However, what markets don't want is government meddling. That shakes confidence and could undermine the real world rate cut effects. We still maintain the tariffs' impact will take time to manifest into the inflation data. And while the recent jobs numbers were weaker, the unemployment rate is still historically low and hasn't really changed much this year. The next Fed meeting is still a month away with another round of jobs and inflation data coming first. So, plenty of runway for this story to evolve. Stay tuned.